Well, the stock market set some records in 2022. Unfortunately, they weren't the good kind of records. The 20% loss on the S&P 500 was the sixth biggest loss over the last 94 years on that market index. You have losses of 44% in 1931, 37% in 2008, 35% in 37, 26% in 1974, 25% in 1930, and in 2002, a 21% loss. Now, aside from the back-to-back losses in 1930 and 1931 during the start of the Great Depression, every other year followed those big declines with pretty big recoveries ranging from 25% to 40%. This is Ryan with TrendLizard.com, and I'm here to answer one question. What should we expect following this big 2022 down year? Now, what we use to find these things out is the Elliott Wave theory. If you followed any of my videos, that you know that's my baby. That's what we do. We apply the Elliott Wave theory to price action on a chart to determine where it's been and where it's going to go based on this ever-progressing pattern that the Elliott Wave theory dictates. So this is a big year. I think we have some good information for you. We're going to take a look at the impact of this big down year and what we can expect moving forward. Not only are we going to take a look at the S&P 500, we're also going to take a look at gold, and we're going to take a look at oil, and we're going to use the ETFs for each one of those guys just to make it tradable, give you some information that you can actually apply to the market and not just some theoretical BS. So that's what we're going to do. Get yourself comfortable. We'll take a look at a few charts, and hopefully it's helpful, and I'll try to continue posting more videos as we go forward, because this is a very interesting moment in the stock market history, and there are plays to be made. So get comfortable. Let's take a look. All right, good people. We're going to start with just a real basic understanding of what Elliott Wave is all about. There's a lot of fancy talk, a lot of mumbo jumbo that goes on when you're dealing with Elliott Wave, but really it just boils down to very simple basics. And those basics are trends play out in 5-wave moves, and counter trend moves play out in 3-wave ABC moves. So here's a perfect example. This shows all the price action we have on SPY, the biggest ETF on the planet, the S&P 500 ETF. You see this trend to the upside in the 90s played out in a nice 5-wave move. And then when 5-wave moves complete, what you get is a counter trend ABC move in the other direction, ABC in the other direction. Once that counter trend move completes, then you get price action to the upside in the direction of the trend, like we're seeing here with what's happened off the 2009 low. 1, 2, 3, 4, 5. Real basic stuff. All we're looking for is to determine where we are in these patterns, whether we're in a 5-wave move or a counter trend ABC move. And that'll tell us what's coming, because once you complete one move in one direction, price gives you the other pattern in the opposite direction. So obviously that's very pertinent right now, because what we believe has happened, and we've done videos in the past that kind of back up that this has been our stance for a long time, is that the advance off the 2009 low is a completed 5-wave move. It ended in late 2021, and we've embarked on a much larger counter trend pullback to the downside. Obviously, that's not the best news in the world. Times are better when we're going through these beautiful uptrend type moves like we saw from 2009 into 2021, but all hope is not lost. If you look at what happened back in 2000 to 2009 when we entered into the last large degree counter trend ABC move, certainly there were some bad times in 2000 to 2003 basically, and then a really bad time 2007, 2008, 2009, at least the start of 2009. But there were good times in there. There was a very long, drawn-out growth period that happened, and certainly there are opportunities as we go, but I think we need to embrace the idea that it does not look like we're in a point here where we're going to see the type of growth we've seen over the past 13 or so years prior to the 2021 high. Things have shifted. Now, if we look at this 5-wave move here, we can get a general idea of where a correction should occur to correct this big 5-wave up move, and it points down to this yellow area here, 210 to 310. Doesn't sound like a lot of fun going from about 400 down to 210. Obviously, that'd be about a 50% decline in price. But it's a long game, and I think, like I said, the previous instances of larger counter trend pullbacks show you that there are opportunities along the way. But I think that mindset needs to be adjusted, that it's not going to be a big uptrend. So let's go ahead and kind of dive a little bit more in. This looks at the last time we had the big 5-wave advance complete, and looks at the ABC pullback that followed that move in the 2000s. Big swings, massive opportunities. You can see off of the 2002 low into the 2007 high, price more or less doubled. That's not a bad time to be involved. But net obviously it headed more sideways. That looks to be the type of period we're in now. So this zooms in more on that 2009 advance to the 2021 high, and it shows the details of the move. Again, all we're looking for is trendy patterns that tell us what direction the trend has been, and obviously off the 2009 low into the 2021 high, the trend has been up. We got a nice 5-wave move here for wave 1, a second wave pullback, beautiful 5-wave move for wave 3, kind of expanding funky 4th wave, but this is the way it labels out now, and then a 5th wave advance off of that 2020 low into that high, and now we've embarked on something larger to the downside here. So that's where we have us. We have us at the beginning of a much larger ABC pullback. Probably takes several years to play out. That part's no fun. I wish it wasn't the case, but that's what we are, and that's the reality we have to deal with. But when we get to come to grips with that, I think it helps us plan a little bit better as we move forward. Now, if we look a little bit closer at what's happened off of that high that was recorded back here in at the 2021 high, we see an expanding large counter trend move. Everything about this move has been counter trend in nature. You can see every down leg looks like an ABC pattern just on different time frames. Basically, you have this red one on a smaller time frame, which was just wave A of a larger ABC pullback, which itself was just a wave A of a larger ABC pullback as shown in blue. So we think this thing is going to continue to expand, continue to take probably several years to play out. I mean, we're talking about correcting a 13-year advance. So the correction to the downside is going to be pretty intense as well. Obviously, these are not the best trading conditions, as you've been able to tell over the last year or more. But if you understand what you're dealing with, it helps. And I think where we're at now is we're in a B-wave recovery off of October's low. And I think that move's going to continue to grow. So there should be some near-term buying opportunities. But ultimately, we expect that move to kind of peter out here off of this low in October and to give us another C-wave down and go from there. So that's going to continue to expand and give us a larger counter trend pullback over the coming years. Another thing that is playing a factor that you need to be aware of is the intersection or the convergence of the 50-day and 200-day moving averages on the S&P 500. You can see they're coming into focus right here, and we're just bouncing back and forth between these guys right now. So that's really causing a lot of consolidation. But overall, I think what we're looking at, again, is a completed 5-wave move and what looks like the start of a much larger ABC pullback that's going to keep the market depressed or moving largely sideways in the coming years. At TrendLizard.com, we track this stuff every week so we can keep you on the right side of it as the smaller trends turn and as opportunities arise, as fleeting as they will be. So that is our take on SPY and the S&P 500 in general and the overall market in general. So now let's go ahead and take a look at gold. We're going to take a look at the ETF GLD because that's just a very tradable way to approach it. And this shows all of its data since it was incepted back in 2005. And you can see a very big up move here, very nice move. Pulled back a ton back in the 2010s at the start of that decade there, and once it found a low in about 2015, late 2015, it's recovered. It retraced all of this pullback here, and it's consolidated near the highs since then. Now, in a very general sense, this is bullish stuff. This is trendy action. This is counter trend action. The overall trend continues to point up, so that is a good thing. Now, here's a chart that shows in red GLD, the ETF, and the black line here is gold itself, the continuous contract. Just want to show you that they track very closely, so this thing does provide a very good proxy what gold itself is doing. If we look at gold, the continuous contract, here's what we find. We find the advance in the 2000s to be a very nice trendy 5-wave move, and this pullback in the 2010s to be a counter trend move. Since then, it's been retraced, like I said. I guess the concern would be, could we get a larger ABC pullback? Could this be wave A, wave B with wave C to the downside? So far, that does not look to be the case. What's happened off of the 2015 low is a very constructive move that suggests trendy upside action has returned. So let's go ahead and zoom in and look at that action here. This is the exact same pattern as we see it on GLD, same way it played out on gold itself. And as you can see, it looks the same. Now we're zooming in. This looks at that action off the 2015 low. And again, it looks like trendy 5-wave action to the upside for wave 1, a big ABC pullback for wave 2, trendy 5-wave action for wave 3 as it should be. And then what's happened since 2020 is a very large ABC pullback retraced the appropriate amount of this third wave advance as we'd expect it to, as shown in this yellow area here. This is kind of the area we look for support. It's the Fibonacci retracement of this up leg here. After it found a low in late 2022, GLD is on a mission to the upside here. It's been very strong, strongly suggesting that this ABC pullback is completing and that we are resuming the uptrend, obviously, to the upside. So let's go ahead and zoom in just on this recovery effort. This looks at that move. Not the easiest thing to label. It's pretty impressive how long this thing is headed directly higher without giving us any type of pullback. But if it is a trendy move, as it should be, looks like it has work to do. Looks like we're in the third wave of this up leg here, basically subdividing within that third wave, but it points much higher. And as long as GLD is trading above 161, I think we have to be bullish here. I think we have to expect this to continue higher as another 5-wave move forms to the upside off of that low recorded way back in 2015. But if you look at what happened in previous trendy up moves, the potential is great. So GLD is going to look bullish in our book and can be bought as long as it's trading above 161. So there's one more I want to take a look at with you tonight. We want to take a look at oil. And again, we're using the ETF. We're going to take a look at USO just to give you a grip on where it's at and what you can expect moving forward based on the Elliott Wave pattern. So this is it. This is all the action we have on USO dating back to 2006. Had a little bit of funkiness at the beginning, a little down-up action. Once it recorded a high in 2008, for the most part, at least until 2020, it has been on the decline. It's been on the give. And you can see it's given us a pretty clear 5-wave move over the course of that decline. 1, 2, 3, 4, 5. One thing you'll notice about these down legs, prior to this down leg here, they've never been retraced by that much when you get that counter trend bounce that's occurred here and here. That changed in 2020. We got this big retracement of this down leg here, and it's a pretty clear indication that something changed on a larger time frame, that some type of larger recovery began. Now, maybe it's not the start of a new long-term uptrend, but at the least it looks like it's a correction of what happened to the downside here. And you can see this has taken forever to play out. I mean, it was more than 13 years, or maybe right in that ballpark. But whatever the case may be, when you're getting this recovery that's about 2 years, it's pretty small relative to this here. So if we have a reason to think that this is a larger degree recovery, it seems pretty bullish. So that's a bullish thing for USO. I'm not certain that at any point it's actually going to give us a Fibonacci retracement of this big down leg that would point all the way up here. It's like 375 to 600. That would be a major retracement. I don't think that's happening, but I do think we can look forward to more growth of USO and oil as things progress. Now let's go ahead and zoom in on this action off of the 2020 low. And you can look at that move here and say this move itself looks like a trendy 5-wave pattern. What do we know about 5-wave patterns? We know they happen in the direction of the trend. So therefore, we're getting action to the upside off of the 2020 low that says this is at least a trend on some type of larger time frame. Again, it may not be the super long-term uptrend, but at least this is the first leg of a larger recovery according to the price action that we're seeing, according to the basic rules of the Elliott Wave theory. So what we have here is a 5-wave move. What happens when 5-wave moves complete? They get corrected by ABC counter-trend pullbacks. So that looks like what has been happening since early 2022. We've had this choppy action, looks and feels corrective. This feels trendy. This feels like corrective movement. The thing about it is this counter-trend pullback is not yet over. There's nothing that suggests it's completed yet. As discussed before, we're looking for an ABC counter-trend move. So what it looks like is we've had this A wave. The recovery that's happened off of that earlier 2022 low looks like the start of a B wave that's probably not over yet. Probably see some higher prices before we see a sharper down leg, a C wave to complete this counter trend pullback. Should find a low somewhere in this yellow area, basically 45 up to about 63. Once you get that larger pullback, then you probably get the start of another big 5-wave advance that would be very much tradable as we go. So I don't know if this is new to you, this Elliott Wave stuff, or if it's something you've been doing for a while, but it's powerful. You know, it's powerful stuff, and I think these are the time frames where it actually works the best. When you start really looking at the minute time frames and trying to apply the Elliott Wave theory on like intraday action, it gets a little bit more dicey. But when you look at the larger picture and you really get a good framework when you're trading that tells you, okay, this is the trend, we're in a counter trend move. It may last years, it may last months, whatever the case may be. it gives you a better framework that you can use your system or use some other indicators or whatever it is you're using to find good buy points and basically time the market. So I hope that is helpful to y'all. I'm going to try to continue to put out a video maybe once a week or so showing some of the more important things out there, whether it be the bigger stocks, whether it be crypto, whether it be the overall market. But these are interesting times, so I think these are worth your time to watch. So otherwise, come visit us at TrendLizard.com. We do this every day with every major ETF that's out there. We track over 80 instruments, whether it's crypto, individual stocks, ETFs, you name it, we got it covered. So hope to see you soon. Have a wonderful day. We'll talk to you later. Take care.